Hello, this is Erin Bramlett from FHLBank Topeka, and this is the training to introduce our newest product option, the mortgage rate reduction product. Here is our disclaimer. The information presented in these training materials is for general information only and is based on MPF guidelines in effect at the time of the training. Please always reference the MPF guides for the most current information. The mortgage rate reduction product is a permanent rate buydown option that provides a lower interest rate and permanently reduced principal and interest payments for borrowers whose income is up to 80% of area median income, as provided by the Federal Housing Finance Agency and based on data from the U.S. Department of Housing and Urban Development, otherwise known as HUD. The table is the same table used by Fannie Mae and Freddie Mac and can be found on the eMPF website on the home screen under Quick Links on the right side of the screen. The interest rate for the borrower will be below the current market rate. FHLBank Topeka will offer one interest rate to price eligible loans at 101.5, and this price is subject to change. FHLBank Topeka is funding the difference between the 101.5 and the below market price through a voluntary board-approved allocation to support lower income borrowers up to 80% AMI. Participation in the mortgage rate reduction product is limited to FHLBank Topeka members who are approved participating financial institutions or PFIs with an active master commitment under the MPF traditional products, which includes MPF Original and MPF 125. PFIs will be limited to a $3 million gross funded amount as long as subsidy funds are available. If you are not currently a PFI and wish to participate, additional documentation and processing are required. Please reach out to the MPF department for assistance. In the spirit of this product, this is the really important part of this training. Income for this product is based on all income for all borrowers who must also be in title, with the maximum income up to 80% of AMI, area median income. This is an overlay to the MPF traditional selling guide. The permanent rate buydown option requires that all combined income for all borrowers in title and on the application be at or below 80% of AMI. All income includes verifiable income. It is important that you do not exclude income that would otherwise be eligible to be included based upon standard secondary market guidelines, even if it is not required for qualification. Refer to the MPF Traditional Selling Guide for guidance on using income, for example, part-time or variable income, such as commission. We have also placed an FAQ document and income decision tree on the FHLBank Topeka's website. There are scenarios outlined to assist you in the underwriting decision, so please refer to these documents prior to using this product. Outside of the 80% AMI requirement, standard underwriting guidelines apply. You can use automated underwriting systems, either DU or LPA, or you can manually underwrite loans following the MPF Traditional Selling Guide. Property type must be a 1 to 4 family owner-occupied property. Condos or PUDs are acceptable. No second homes will be allowed under this option. The loan purpose can be for purchase or refinance, including both rate term and cash out refinance. Standard secondary market LTV and TLTV limitations will apply. Conventional loan limits, credit score, and PMI requirements also will all remain the same standard secondary market. Regardless of income type used for qualifying or what DU or LPA require, full tax transcripts are required to be obtained prior to funding under this product to validate the income used for underwriting. Loans not meeting the income requirements will be subject to repurchase. Valuation alternatives are acceptable to use. So if you receive an appraisal waiver or one of the hybrid appraisal options, you are free to use that option with the DU or LPA approved loan. Please see MPF announcement 2024-41 for more information on available appraisal options. Since this is a permanent rate buydown product, the borrower is to be qualified at the below market rate. PFIs should not charge any points to borrowers, and there is no need to mark the loan as a special product like an affordable loan or buydown option when completing the loan presentment or the ULDD for the submit batch option. FHLBank Topeka will post a single note rate for MPF traditional products under the fixed 30-year permanent buy-down FHLB subproduct, under the pricing options available on eMPF. You may have noticed this subproduct as an option that did not have pricing available before. Delivery commitments are still mandatory, so there is potential for payoff fees if a loan is not funded prior to the delivery commitment expiration. We do recommend using a 60-day delivery commitment, although you will see a small difference in pricing displayed on the rate sheet for the different commitment terms. There is no difference from a 5-day to a 60-day. All will have the same price. You will have the ability to extend a delivery commitment for up to an additional 30 days, and standard extension fees will apply just like normal. So how does this work? Let's review a scenario. In our example, we will assume a market rate of 7% with a price of 101.5. The mortgage rate reduction interest rate available to your borrower will be 5.25%. Because this is a below market rate, the price is a significant discount at 94. When we look at the delivery commitment, the price is going to be roughly -6. The permanent buy-down price is 1.5% or 101.5. The difference between the permanent buy-down price and the delivery commitment price is 1.5% minus the -6%, which gets us to 7.5% or roughly 7.5 points on each loan that you sell. In our example, we're looking at a loan funding amount of $100,000, an interim interest amount of $0. The agent fee is equal to the loan amount times the delivery commitment price. So $100,000 times the -6%, which gets us to a -$6,000. The net funding amount is defined as the loan amount minus the interim interest plus the agent fee. So in this case, that's $100,000 minus the interim interest of 0. And to that, we're going to add the -6,000 for $94,000. The buy down is equal to the loan amount times the difference. So that's $100,000 times 7.5% or $7,500. And now we'll get to the total proceeds to the PFI. That is defined as the net funding amount plus the mortgage rate reduction amounts. So here you have the $94,000 from up above plus the $7,500 from that middle bullet point to 1015 or $101,500. FHLBank Topeka will post a single note rate for MPF traditional non-government products using the FX30 product, fixed 30-year permanent buy-down FHLB subproduct, and be sure to select the appropriate remittance type for your institution. When you view pricing, you will see all available commitment terms and a single note rate with a note at the bottom indicating the price you will receive of 1.5%. Depending upon the commitment term, you will see slight pricing differentials, but don't worry, the net price will be 101.5 or 1.5% regardless of the commitment term chosen. Please make sure you give yourself enough time to close a loan and take advantage of that 60-day commitment. You will submit your request to lock funds just like normal, outside of the selection of the appropriate subproduct code. When you select this subproduct code, you're going to see some new and different language underneath that subproduct related to the requirement of the 80% AMI for your borrower. One interest rate is available, so make your selection there. Rates are not expected to change during the time this product is available. However, that is subject to market conditions. You'll notice once you hit submit, the confirmation screen will show you only have the one interest rate available. There is no interest rate tolerance with this option. You will be reminded again that you are selling a loan into the mortgage rate reduction product and the available price. It's going to show you that discount of 6%, and it's going to show you the mortgage rate reduction price of 1.5% for our example. Once you've entered the delivery commitment and while you're waiting to accept it, you have that same 60 seconds you normally do. Again, we're going to show you that single note rate. We'll show you the discount and the mortgage rate reduction price. You can accept or cancel the delivery commitment here. So please review the information carefully to ensure you've entered it correctly. Once you've accepted that delivery commitment, you're going to get the delivery commitment number and a confirmation just like normal. And when you request your funding, here's where you're going to see the permanent buy-down amounts prior to requesting the funding on the new loan. The loan funding process will follow the same process used today. There are no additional closing documents required. Please do not put the subsidy funds on the loan estimate or the closing disclosure, as the funds are being distributed to the PFI and not to the borrower. There are also no changes to the funding process. The funds will be deposited into the same FHLB DDA as normal. PFIs do not have to change anything related to closing and delivery steps. It is important to note that if a repurchase is required, the buy-down funds and the premium on the sale will be recaptured. The same will apply if a loan is paid off within 120 days of purchase. This slide is specific to servicing release PFIs that sell servicing to our servicing aggregator, NewRez LLC. If the interest rate provided happens to be below the rate offered in the SRP schedule, the price that corresponds with the lowest rate available will be used as the base. In our example, if the base of the SRP is 4.625 and the rate offered is 4.5, the base SRP will be 1.12 as highlighted on the SRP schedule. The end of training is near, so we just want to provide a little summary of what we have discussed today and provide next steps for you. Loans will be sold into existing MPF Original or MPF 125 master commitments. We do require only one loan per delivery commitment is locked. All borrower income cannot exceed 80% of AMI. All adult owners must be on the application, the note, and hold title to the property. It's required that you include all income for all borrowers who are also on title. No third-party originations are allowed. All loans must originate and close in the name of the PFI. The product type that will be available is a 30-year fixed only. Loans will be subject to MPF program's quality control process, and those loans not meeting income requirements will be subject to repurchase. Order full tax transcripts to support the income used for underwriting when planning to deliver a loan under this product, and remember those tax transcripts must be in the file when you request funding. The note rate and price will not change often. There is no interest rate tolerance. Only one note rate will be displayed, which is the interest rate you will offer to your borrower. Check eMPF or your product and pricing engine for pricing changes and availability. Loan data delivery must be primary residence and have a loan origination source of retail. Last but not least, loans must be purchased by MPF on or before December 31st, 2025. So for next steps, check the active master commitment summary report in eMPF to ensure that you have capacity to take down delivery commitments. If an amendment is needed, please contact Grant Hague so an amendment to increase your commitment can be prepared. Please review your current pipeline for qualifying borrowers up to 80% of AMI. Ensure that income from all borrowers who are or will be owners of the property is included in the underwriting analysis. Once eligible loans are identified, go into eMPF and take out a delivery commitment. You must take a separate delivery commitment for each loan. If you use a product and pricing engine, please contact your vendor to ensure this product is available to you. Keep in mind, PFIs are limited to gross funded amount of $3 million as long as subsidy funds are available. We will be monitoring delivery commitments and fundings, and pricing will be removed once the PFI volume of $3 million or the subsidy limit is reached. FHLBank Topeka will guarantee subsidy funds for all unexpired delivery commitments. To access pricing, please send an email to productadministration@fhlbtopeka.com. This is your acknowledgement that you have completed this training and is required before you will have access to pricing. Only one person from your institution is required to complete the training and send the acknowledgement. However, we do recommend anyone that will be using the product also view this training. Please include your name, your institution name, and your PFI number in your email. Thank you for attending the training. We really are excited to be able to offer this option to our PFIs. You will find information on FHLBank Topeka's website, and of course, you can retain this training deck for your records. Thank you.